Most people think income grows in a straight line. You work more hours, you earn more money, you gain experience, and over time, your salary can increase. And that's true to a point. But there is another kind of growth that behaves very differently. It doesn't move in a straight line. It starts slowly, almost unnoticeable, and then begins to accelerate. That's the difference between labor and capital. Labor earns through effort. You trade time, energy, and skill for income. And no matter how efficient you become, your time is still limited. There are only so many hours in a day, and that naturally places a limit on how fast income can grow. Even if your rate improves, the structure stays the same. Effort in, income out. Capital works differently. Instead of relying on time, it relies on ownership. When you own an asset, whether it's a business, an investment, or something that produces value, it can generate returns, and those returns can be reinvested. This is where compounding begins. Returns start generating their own returns. At first, it feels slow. The growth doesn't seem dramatic. But over time, something important happens. Each layer builds on the previous one, and instead of growing step by step, it begins to expand more quickly. Think of it like a snowball. At the beginning, it's small. As it moves forward, it gathers more. And as it grows, it gains momentum. The growth isn't just increasing. The pace of growth increases too. Labor doesn't naturally work this way. You can work more, you can earn more, but your past effort doesn't continue generating income on its own. Capital does. And over longer periods of time, the difference becomes clear. One grows steadily, the other builds on itself. This doesn't mean labor isn't important. For most people, it's the starting point. It's how income begins and how skills develop. But the shift happens when income turns into ownership, when what you earn begins to work alongside you. Because over time, it's not just about how much you earn. It's about how that income continues to grow after you earn it. And once you see that difference, you start thinking differently about growth, not just as something you work for, but something you build over time. In the next video, we'll explore how this idea connects to something even more powerful: why wealth tends to concentrate over time.